Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. While we are vaccinating at a stupendous rate, the Delta variant still continues to wreak havoc across multiple regions. And in light of this, and in light of the central bank action that is expected all through this week, the question to our guest today on Talking Point is whether he believes that easy liquidity and thereby demand for paper, both public and private, would continue. He has a pulse of the entire APAC region because he's the head of the investment banking APAC at JPMorgan. Paul Uren joins us right now on the show. Paul, great having you. Thanks for joining in. I hope all is safe.
Great. Thank you for having me, Neeraj. It's great to be here.
Thank you. Well, the pleasure is ours, Paul. Trust me on that. Can you give us a sense, Paul, of how do you see the tidings around deal making and money flow in the APAC region? It's been rather strong in India, at least the last 12 odd months. Is it true for the rest of the region as well? And do you anticipate that to continue?
Yeah, it's been a very strong year so far this year. We operate in 15 markets around Asia. So we've got investment bankers servicing clients in every one of these markets. And what we've seen this year is that activity levels have been very broad-based, whether it's a country by country, but also product by product across M&A, equity capital markets, and debt capital markets. The investment banking fee wallet that gets tracked by the likes of Deal Logic shows that the market is up around 30% year on year. And markets like India are up even more, with the Deal Logic wallet so far up around 60% this year. So it's been a very robust environment for deal-making activity.
You reckon that can continue, or is it difficult to say in light of all the conversation around taper and interest rates, so on and so forth?
Yeah, market conditions have been somewhat benign. It's been very constructive given central bank policy that's been very accommodative across many of the markets. Clearly, a number of our corporate clients have brought forward their refinancing needs in the debt capital markets, taking advantage of very low rates and tight spreads, and the equity capital markets taking advantage of attractive valuations. Our expectation is that strong level of activity will continue. But there's no doubt it will start to normalise at some point, and whether conditions slow down later this year or sometime into next year, it's difficult to tell. But for now, market conditions seem very constructive.
Yeah, no use preempting. Actually, I was speaking to your colleague Sanjay earlier as well, who was also referring to the same thing. I mean, and I think multiple people have expressed this opinion about who knows when that will start to usher off. My question, therefore, then is, do you see that if we work with a hypothesis that the liquidity tap doesn't quite get shut immediately, could the nature of the themes which are being pursued by the liquidity change because of valuations, because of maybe business reasons or geographical reasons?
Yeah, one of the areas where we've seen a very big pickup, if we think about it product by product, has been in M&A. And what's happened is a lot of corporates have decided that they need to get on with their strategic agendas. So whether that's looking at reevaluating the portfolio or the mix of businesses that companies are in, whether that's reevaluating which geographies they're operating in, we're seeing an increase in divestiture activity. We're also seeing an increase in activity on the buy side. So M&A looks to us like it's going to continue to be very active. And M&A in many instances also requires financing. And so whether that's private equity or corporate acquirers, we expect the financing to be required and the financing markets to be very active. Likewise, the equity capital markets pipeline looks quite robust. There is a large refinancing need that's been brought forward by many corporates. So do we expect, there's a chance that activity levels in debt capital markets aren't quite as high next year? Surely there is a chance of that. But based on everything that we're seeing at the moment, we think markets will continue to be constructive for financings.
Interesting. And Paul, would you reckon across the Asia region, maybe, because they all are synonymous with the fact that there is a consistent lockdown and an unlock process on, so to say. Hitherto, at least from whatever little we see in India, is that money was flowing into areas which were tech-enabled spaces, able to move across business cycles without getting hampered by the lockdown. Now we are starting to see some conversations around capex-related themes getting larger dollops of money as well. Do you reckon that could be true elsewhere? What's your experience about what themes would this money change? I understand what you said about what M&A and financing, but in terms of sectors, is there a common thread, or is it diverse across region?
Yeah, it's a great question. Look, there's no doubt that we have seen more lockdowns across the Asian markets when we compare that to what's happened in North America and Europe. And clearly that's having an effect in different ways. It has led to an acceleration of the digitization of a number of different industries, online purchasing, e-commerce, online food delivery, all of those sorts of things. And we expect that trend or that theme will continue across every one of the markets in Asia. TMT activity has been a big part of the M&A market this year. That's going to continue as companies try and rapidly expand to get more scale. And then to your comment about infrastructure, infrastructure spend is obviously one of the ways to support the growth and development of a number of economies that have been hampered by the pandemic. And so we're seeing a number of different governments, invest in a meaningful way in infrastructure across the entire region.
Okay. The other curious thing about technology, when we speak about TMT, just technology, Paul, the large listed tech universe in India doesn't need capital. They are actually returning capital by the dozens. And there is a fresh bevy of platform stroke product companies which are hitting the markets. And it's a formation of almost a new sector, because hitherto in India, we haven't had companies which are traditionally loss-making getting appetite. But Zomato has changed that. There are a couple of others which are coming up, and probably a lot more during the course of the year. What's your sense about the kind of demand that such paper from India could attract? Because it's kind of a new phenomenon for all of us out here.
Yeah, we're very excited about the Indian technology market. Obviously, there's a huge TAM or addressable market. There's a rapid adoption that's increasing around mobile technology. There's a growing middle class. There's a number of very innovative companies around fintech and other areas, and so we're very, very excited about the technology backdrop as it relates to India. It's, I think, rapidly becoming one of the most important tech markets around the globe, and it's one that we expect to continue to see support from international investors for.
Okay. Well, is the conversation around the reserves in India and therefore the probable stability of the currency, even if there were to be a bit of a taper, getting into large deal conversations at all? Because I'm guessing that would also be a factor that could maybe impact the timing of the decision to invest large money. Is it getting into it at all, or no, not really?
Not in a meaningful way. I think most of the situations we're looking at, investors are looking forward several years. They're looking at very attractive growth trajectories, increasing adoption rates, all of those sorts of things. So they're not necessarily discouraged or put off by more short-term matters, and really focused on the long run and the long-run trajectory of these companies.
Got it. One more question, Paul, and I'm just wondering your individual view as well, and what you learn from your clients or customers. For the last so many years, most money that comes into India wants to invest in companies that are making hay from the great Indian middle class consumer. But the last 12 months have shown that Indian manufacturing is waking up to be able to export outside, be it chemicals, be it textiles now, the PLI-led electronic manufacturers, so on and so forth. Do you think money will still come into consumer spaces which will benefit out of the Indian consumers, or Indian exporters have a fighting chance of attracting global capital as well?
Yeah, I think both elements of that are correct. I think you've got, a number of companies that have rapidly become world leaders. They've been able to export technology outside of India. You've also got a huge consumer population that a number of global companies want to be able to access and leverage their own expertise in India. So we feel quite excited about those dynamics and what that means for the Indian market.
Okay. Last couple of questions, Paul. Before I end with a taper question, which you would have anticipated, one quick question on what else within the Asia Pacific landscape is exciting to you. I mean, it will not necessarily be an Indian phenomenon, but something in Southeast Asia, something in North Asia, which you find global investors being very attracted to, or you find yourself being attracted to and pitching it to your set of clients.
Yeah, well, the great thing about Asia as a market, as an investment banker, is that there are a lot of different markets. They're all interlinked, but they're also all discrete. And the market backdrop is very dynamic. We have, a number of different growth drivers. We have lots of factors causing activity. There's a different regulatory landscape in every market. And so as an investment banker, there's a lot to talk to clients about. We really enjoy engaging actively with our clients, trying to find solutions to problems, help them raise capital, help them address their strategic agenda. And given just how dynamic the marketplace has been, it's a really exciting time to be an investment banker in the Asia Pacific region.
Okay, but no favorites, I guess. In which case, let me ask you my final question, Paul. What could disrupt the apple cart?
Yeah, I think the risks for the markets more broadly across Asia are, a change in central bank policy that surprises on the downside. I think most things have been fairly well flagged to date, so the market's anticipating that over the course of the rest of this year and into next year. Clearly, the geopolitical environment, continues to have challenges. That could lead to some disruption to the markets. I think the other thing is obviously the trajectory of the pandemic and how that's evolving in different markets across the region and also across the world.
Okay. Paul, this was insightful in multiple ways, and take a moment to thank you for joining us today and giving us some sense of what the deal-making situation is like in the Asia-Pacific region. Many thanks for that.
Yeah, Raj, it's great to see you, and thanks for the opportunity.
And the pleasure is ours, and viewers, thanks for tuning into this conversation.